This is Rick Rule for Rule Investment Media and the Rule Classroom. Sponsors of the 2026 Natural Resources Investment Seminar held July 6 through 10 in Boca Raton, Florida, or much more likely via live stream in the comfort and convenience of your own home. However you choose to attend the conference, a couple things that you need to note. The first is that we're going to give you more information in 4 days than you could absorb in 4 days. So we're doing two things to give you better value. The first is that we're interviewing every sponsor and every speaker at the conference before the conference. So you arrive at the conference well informed and well prepared to allocate your time efficiently. Secondly, we record all aspects of the conference, including all of the breakout sessions, allowing you to refresh your memory where it needs refreshing and do deeper dives into individual subjects which are of interest to you. Two more things to know. Every exhibitor at our conference is owned in the accounts of the conference sponsors. Unlike any other conference I'm aware of in the world, every single exhibitor has been vetted. If we don't like them well enough to own them, we don't like them well enough to admit them on our conference floor. And finally, you, the attendee, enjoy an unconditional money back guarantee. If you think for any reason, whether you attended live or via live stream, that you didn't get your money's worth, I'll give you your money back. No other conference in the world that I know of has enough confidence in their content to give you an unconditional money back guarantee. So let's get on with the process. I have the pleasure now to interview a new friend of mine, Aurora Davidson. By the way, she was a star at the Rule Classroom Copper Boot Camp. So this is her round two of interviews with Rick. Aurora, first of all, welcome. And secondly, tell our audience who you are and why you're qualified to run Amerigo, and in particular, why you're qualified to answer all the nosy questions I'm about to subject you to.
Thank you, Rick. It's a pleasure to be here with you on the round two, as you call it. Hopefully, there are many more to come. My name is Aurora Davidson. I am the CEO of Amerigo Resources, which is a very unique copper producer, and we'll talk about Amerigo in a second, but you were asking about me. So I'm a chartered accountant in Canada, trained in Canada. I've been with Amerigo since 2003. So I probably joined when I was 15 or so. And I joined the company as CFO. I was the company CFO for a number of years until 6 years ago, I was promoted to the position of CEO. And I've been in that role ever since and enjoying it. It's strange for a CFO to be the CEO of a company. We're seeing more of that happening in the sector. So there may be a good reason for that. As we will be seeing, Rick, Amerigo is a very unique story that is focused substantially on how financially effective it can be. We are not a growth story in the traditional sense that we see in the sector. Keeping control of the cost, keeping control of the capital allocation are quite primordial to the success of the company. So I think we're a good fit, Amerigo and Aurora.
Well, I think you've made a good point. Maybe you're a little too modest when you say you're not a growth story. The truth is that you're sitting on one of the largest copper resources on the planet. So we'll get into that. For the benefit of the audience, Amerigo reprocessed tailings from a legendary deposit in central Chile, El Teniente.
Mm-hmm.
And if my memory serves me correctly, you have about 3 decades of resources to exploit. So tell us something about the odd nature of your resources. Tell us about the processing plant. Give us the story in Amerigo. Give us the investment thesis, the income thesis around Amerigo.
Absolutely, and it won't take us a long time because, as you know, Rick, this is a very simple business story, and that's one of the biggest attributes that Amerigo has. So if you strip Amerigo down to first principles, we are a very rare thing in copper, and I've spoken about that. We are a long life asset tied to one of the best copper systems on the planet. We are able to generate cash across the cycle. And a very important thing that happens not that frequently, unfortunately, in our sector is that we are able to return that capital to the owners of the company. So Amerigo doesn't mine ore. You described this perfectly. We reprocess the tailings from El Teniente, which is the world's largest underground copper mine. That matters because tailings recovery gives us three structural advantages that are very hard to replicate. The first one is geological certainty. We're tied to an operating tier one copper system with decades of remaining life. You mentioned 3 decades. I think it's more than that. Some of the disclosure that El Teniente has gives them a life of mine to 2085 on execution of their structural growth project. So that's pretty significant. So we have no exploration risk. We have no resource fantasy, nor no surprises in our geological path. The material is already mined, and it's being mined by the El Teniente, so we know exactly what we're working with. The second aspect is capital discipline. And that ties up to the question of why am I qualified to lead Amerigo? This is not a capital-hungry business. Our plant is built. Our growth comes from optimization, not from billion-dollar expansions. Most of our project paybacks are in months, not in years, and that's why we can essentially self-fund everything that we do. And the third aspect, which is key to our conversation, is cash conversion. When copper prices work, Amerigo is converting margin into free cash flow very efficiently. We have no debt leakage anymore. We became debt-free last year. We have no expansion sinkhole. So the cash flow flows directly from the P&L to the balance sheet and then to the shareholder. So that's the 3-minute pitch or 2-minute pitch of Amerigo.
Tell me something about the contractual relationship that you have with Codelco. Maybe share with our audience who doesn't know who Codelco is. And tell us about the probability that Codelco will continue to make millions of dollars a year off of their waste.
Look, talking about Codelco, it's like talking about the royalty of copper. It's the foremost copper name in our sector. They're the biggest copper producer. They are leaders in how they run their mines. As I mentioned, El Teniente is the biggest underground copper mine in the world. So they're at the forefront of our industry in every aspect and way you can think of. Our subsidiary in Chile, which is called MVC for Minera Valle Central, has had a relationship with Codelco on a contractual basis since 1992. It's a long-term relationship. It's a win-win relationship in which we are giving them a compensation for letting us work with their tailings. That compensation is tied up to how much we produce and to the copper price. We are repositioning their historic tailings into their new tailings deposit because we work both with the fresh tailings from the mine and with the historical tailings. And we are, a fantastic social partner for them. We employ, all in all, between our employees and subcontractors, close to 1,000 people. We have one of the cleanest safety records on record. We've been without any lost time accidents at our facility for more than 4 years. So it is absolutely a win-win situation for them to basically have a dedicated expert in reprocessing these tailings, providing additional copper for Chile, additional income for Chile, and additional economic and production benefits for El Teniente.
Tell us now something about what you do for shareholders. Lovely that we benefit Codelco, and I suspect that benefit for Codelco is what gives you access to the tails for the rest of time. Tell me something about what you do for shareholders. Tell me how, first of all, what the quantum of profit is likely to be, and the unique nature of the blend of secured underlying dividends and extraordinary dividends in periods of time when your free cash flow surprises to the upside.
Look, we established what I think is one of the most unique capital return strategies in the sector at the end of 2021. At that point in time, we were in a position to refinance our debt. We had taken debt to grow our asset without diluting shareholders. So there is a long path of commitment to shareholders, including how we have funded our growth and our expansion to get to the point where we are. And in 2021, we said we can refinance this debt and we will be generating free cash flow to equity that we can start returning and should start returning to our shareholders. And we created a structure that consists of three parts. We have a quarterly dividend, which is our DNA fundamental commitment to shareholders. We have grown that dividend from a starting point of 2 cents Canadian per share per quarter to 4 cents Canadian per share now. So we've doubled that in the scope of the 4 or 5 years that we've had with the capital return strategy. And that dividend for us has to be as safe as the air that we breathe. We cannot play with reducing or canceling or postponing that quarterly dividend. So it creates a base and a basic commitment. But in periods of higher free cash flow generation, it's not enough. So rather than bump up that quarterly dividend, we work with two other mechanisms, which are share buybacks and performance dividends. And the performance dividend has a quirky name, but it's on the performance of the copper price. So as soon as the copper price starts outperforming and generating excess free cash flow to what is required or committed under the quarterly dividend, we return that dividend to shareholders. And I think Q1 of 2026 was a perfect example in which we generated free cash flow of almost $15 million US in the quarter. We had done share buybacks throughout the quarter. We had paid our quarterly dividend, but we had too much cash left on the balance sheet at the end of the quarter, and we declared a performance dividend on the same amount as our full annual dividend, 16 cents Canadian paid as a performance dividend, our highest on record yet to our shareholders based on the results of that free cash flow generated in Q1. So our operation is stable, operationally speaking. We have a very predictable production pattern. We know our costs very well. We control our costs very well. And we have no significant CapEx requirements. So as I said earlier, that generates a substantial bump up on the most important line of the balance sheet, which is the cash. And that cash doesn't sit in the balance sheet of Amerigo for too long.
So I realize that past results are no guarantee of future performance, but we're talking about between the regular dividend and the performance dividend, some number in the range of 32 cents. Against what share price? What's the market cap for Amerigo? And what does the balance sheet look like?
Look, if you were to estimate the Q1 free cash flow against today's market cap, our free cash flow yield is 7.7%. So that's a good number to remember, an easy one, 7.7%. Our market cap in Canadian dollars just over $1 billion this year. That's our highest on record. So we just became we beat that threshold, and as a result of that, we were included in the COPEX ETF on their re-rating of April the 30th. So it's a good time, and we're bullish on copper prices and also on our operation. I think it's a perfect combination of very stable, a very stable producer with a very unique geological and capital intensity profile that is probably better equipped than anyone else to generate these benefits of immediate cash conversion to shareholders.
Aurora, one of the things that, well, you're the right person to answer this because of your financial background. One of the things that happens when people assume that you value all mining companies equally is that they get focused on metrics that aren't always appropriate, which is to say, as an example, yield as opposed to value.
Hmm.
The second question I think that we need to address is NPV calculations. Doing an NPV calculation on a mature producer like yours means that any free cash flow that exists after year 10 or 11
False
isn't
off.
included because it's discounted away. But 10 years from now, your net present value calculation would probably be the same as your net present value calculation today, which is to say that the valuation tail is ultimately worth as much as the whole. Or put a different way, depletion and depreciation, well, depreciation might count in a big facility like yours, but depletion absolutely doesn't matter. Could you talk about Amerigo in that context and the fact that your NPV tail, and to some extent, even your dividend, because of the extraordinary durability of your dividend, understates the value of Amerigo?
Absolutely. I think that that's one of the aspects that's very difficult to capture because the rules exist for companies that are totally different from us. The rules exist for companies that have to be reinvesting billions just to keep their production at current levels, let alone grow that production. So I don't even care about an NPV calculation. It falls off the cliff. We are essentially an outlier in terms of being a generational investment. Perhaps one of the best things that one could do to a newborn baby, and I have a new nephew in my family, is just give some shares of Amerigo that could probably pay for his college, education just on the dividends alone. It is an anomaly in that sense. It's not it doesn't come without the responsibility of ensuring that that operation continues to work like clockwork. But I think some of the traditional financial metrics, you or shareholders would do yourself a disservice by trying to capture us within that same measurement tape. You have to think about this as essentially a utility rather than a mining company.
And if you view it as a utility, that's an interesting segue. What goes wrong with the utility is political. Could you talk something about the change in politics in Chile
Uh,
and how that might impact the fortunes of Amerigo?
well, I think that the fact that we are associated with Codelco, and perhaps part of what I need to do is just explain that Codelco is a state-owned copper company. So it is owned by the people of Chile. I don't know, Rick, if you know that copper is called the salary of Chile, and Codelco is the one that controls that purse. So it's intrinsically associated with the well-being of the country. Nationalization risk doesn't exist for us because it's already a national resource. So it is another anomaly in the sense that political disruption could occur in the country, and it hasn't occurred in more than 30 years, but we are isolated from that by virtue of our relationship with perhaps the most protected asset in Chile.
Any of our listeners who go to Chile will be amused to see the copper price on the front page of the newspaper on a daily basis. That's amused me in Chile for 40 years. Aurora, thank you for your efforts on behalf of shareholders, including, of course, myself and my good friend Ross Beatty, who compliments you. Thank you, too, for your sponsorship and support of the educational activities at the Rural Symposium. We look forward to hosting you in Boca Raton.
Thank you very much, Rick. A pleasure to talk with you.